Okay, this is the second video here that I'm doing on the, I'll call it the Forex school. When you trade Forex, you simultaneously buy one currency and sell another. And the one we're going to talk about here in this video is the Euro US dollar. Okay, you have to go through a broker. This is not something you can do. And the reason I'm picking this one is the Euro US dollar is the most popular currency pair traded in the world. And what that does, it gives you the advantage of, for example, you put in an offer to buy at a certain price, good chance you're going to get filled when it hits that price. Okay, same thing with a sell. You put an offer to sell at a certain price, it hits that price, pretty good chance somebody's going to buy it right up there then. Okay. If you've ever traded stocks or you've ever traded options or you've ever traded futures, you know usually you pay a commission to the brokerage firm to execute your trade, to handle it. Well, Forex is a little bit different. There is no brokerage fees, but what you do is you pay a spread, the difference between the bid and the ask. And I clipped a little, as you can see right here. This is a actual trade today I made on the Euro US dollar. I bought it. I paid 1.20878, and the 1.1 you see here below, that's the spread. As you can see, if you will take 1.1 off of that, it'll come out to be 120.867. So when you buy, the minute you are filled, you can sell it for 1.1 pip less than what you bought it for. So in other words, you're down money. Okay, that's the commission you're paying on Forex. Now, if you're selling it short, it works the same way. You could sell it for 120.867, but in order to buy it back, you'd have to pay a 1.1 pip premium. So you're down money again. So the object, obviously, is if you buy it and pay this price, you need the sell price to go above this in order to sell it back and make profit. In this case, it has to move 1.1 pip. Okay? By trading the major currencies, and I got a list here, we're going to look at them in just a minute, of the majors. These are the ones that trade the most volume. These are the ones that have the closest bid-ask spread. Now, they are probably the most liquid as well. Again, when your price matches your offer to buy or sell, pretty good chance you're going to get filled on when you trade a major. You trade some of these exotic currencies, and I'm not going to go into them, but some of these exotic currencies that are low volume. For example, if you would trade the Russian currency, and I forget what the Russian currency is right now, against the Chinese yuan, there's not very liquid, and the bid-ask spread might be 30 or 40 or 50 pips. So you don't want to, at least I don't want to, put myself in a situation where I buy or sell and have the thing to move 50 pips before I even make money. I'd much rather have it right here, because what I do is I'm what they call a scalp trader. I trade, try to execute a lot of trades during the course of the day and make 1 or 2 pips off of each one of them. And I think last month I'd made like 850 trades. The month before that, I think 900 comes to mind. So I'm looking to make a little profit multiple times a day. Okay. There are other people that trade that say, hey, I'm going to buy it here at 120.87 and I'm going to hang on to it till it goes to 121. I'm going to make about 13 pips. Okay. But my style is to buy it. It makes a little move. I sell it and I get out. How do I know when to buy, when to sell, and all this sort of stuff? We're going to talk about that later. Remember, in the first video I told you I wanted you to get on the demo and trade the demo and start recognizing. Most of these currencies trade somewhat in a pattern. Imagine riding on a roller coaster in an amusement park. You go to the first hill, and the first hill is really big, and the second hill is a little smaller, and the third hill is a little smaller, so on and so forth. Forex trading works somewhat similar to that. It trades, and you probably heard the term waves, like waves in the ocean. You go to the ocean and you watch a little wave come in, a little wave come in, then all of a sudden you get a great big one. Well, it's kind of the same on the Forex. It moves a little up, a little down, a little up, a little down. And there are certain conditions you look for, certain patterns you can recognize. And we'll talk more about that later. But right now I don't want to get into these details because I really want to emphasize I don't want you trading live money yet. It's your money. Do what you want to do. But if you start trading live money before you have gone through the class here, and not that I'm the best teacher in the world, but I think I can save you a lot of pain and give you a better chance of being successful. You're going to hear me say that 100 times. The chances of being successful. I'm not guaranteeing anything, okay? There is no guarantees in any financial trade. But I'm giving you knowledge to let you learn how to increase your odds at being successful, okay? That's like looking at a football game and betting on the football game before the game starts. It can go either way. But if you play 3 quarters and you know what the score is after the 3rd quarter, then you're allowed to bet on it. Your chances of being successful is a lot greater than it is by betting on it before the game starts. So that's what we're doing here, is we're giving you tools to learn, to see what's going on, and to increase your chances for success. Okay, so now let's look at the major currencies that we trade. The euro, US dollar, the most liquid, the most highly traded in the world. Another one is the euro, Japanese yen. I trade this. This has also a tight bid-ask spread. The Great Britain pound, US dollar, I've traded it a few times. I don't like to trade this so much because the pound and the US dollar, and it seems to me the euro and the US dollar trade about the same. And so if I'm going to trade Europe versus US, I'll just trade the euro US dollar. US dollar and the Swiss franc. This has got a wider bid-ask spread. You might want to kind of look at this where the euro US dollar might have, quite often I trade it with a 0.8 pips, not even a full pip spread. This one here trades a lot with 2.5 to 3, which means you've got to have a 3 pip move before you even get back to even. Where if I'm trading the euro US dollar with say even a 1 pip spread, I'm in and I'm out with a profit before you even get back to even trading this pair. Not going to say not to trade it. I have traded it. But look at the pip spread. US Canada. This usually has fairly tight, about 1.5 pips spread on it, but it doesn't necessarily move as much as the rest of them. And no matter what Forex pair you trade, if it's just sitting there going along drawing a flat line on the chart, nobody's making any money. It's got to move up or down in order for somebody to make money. The Australian US dollar, I've traded that. That usually has, after the market gets open and been open for a while, at 5 o'clock p.m. the market rolls over for the day. It stays open, but that's the end of the trading day. And you'll watch this spread go from, say, 1 pip to about 5 or 6. And it'll take an hour or 2 or 3 to get back down to 1. Always look at your pips before you enter a trade. The New Zealand US dollar, I've traded it a time or two, not very often, but it is a major. So that's your major currencies. These are the ones in my opinion, you need to trade. This list is kind of drawn up in the order of the volume. In other words, again, the US dollar, euro US dollar is the number 1. Japan is number 2. And one trade I've kind of noticed, these two will trade in opposites. In other words, if you notice, in this one, the US dollar is the second currency. So when you buy it, you're saying you believe the euro is going to be up and the US dollar is going to be down. That's what you're betting. On this one, the US dollar is first and the Japanese yen is second. So if you buy it, you're saying you believe the dollar is going up and the yen's going down. Quite often, you can trade these two opposite. If you're long here, you can go short here and make money on both of them at the same time. It's just something to look at. Again, you need to study and see how these markets react. So that's what I have for the second video. Hope you enjoyed it.